Hi, my name's Adam. Welcome to the channel. Thanks for joining us today in our third video of our mini-series around RRSPs and what to do with your RRSP when you enter into retirement. In today's video, we're going to focus in on withholding taxes. So when does withholding tax apply? How does it work? And how to make sure that it works for you, how to look at the numbers and make sure that you use the best tax strategy around redeeming your RRSP and your RRIF accounts. If you haven't already subscribed to the channel, make sure to do so. Hit the subscription button below, as well as the notification bell, and that will give you a notification every time we release a brand new video. This week, we're doing our mini-series, so there's 5 videos on top of the regular 2 videos we do every single week. So every Tuesday and Friday, we release a new video on financial, retirement, estate, and tax planning for Canadians. So let's jump into withholding tax. What is it and when does it apply? So we've talked about converting your RRSP into a RRIF account, a retirement income fund account. But when does withholding tax apply? So withholding tax will only apply to amounts above the minimum amount of your RRIF withdrawal for that calendar year. So if your minimum is, let's say, $4,000 RRIF withdrawal for the calendar year, and you do $10,000, that's $6,000 over the minimum, you're gonna have a 20% withholding tax. So withholding tax on RRIF withdrawals are only on amounts above the minimum, and the amount of withholding tax is the same as if you pull out of an RRSP. So $0 to $5,000 is a 10% withholding tax. $5,000 to $15,000 is 20%, and above $15,000 is 30%. Now, this is a withholding tax. This isn't the actual amount of tax that you have due. So let's take a step back. Let's say you pull out the very minimum amount of your RRIF payment. So let's say the minimum amount again is $4,000, and that's all you take out for the year. There is no withholding tax on that $4,000. But let's assume you also have rental income and a pension income, and your total income is $60,000, $70,000, $80,000. Well, that $4,000 is added to your income and you're gonna owe tax on that. So the concern there is maybe you fall into a 30% tax bracket. So of your $4,000 withdrawal, you're actually gonna owe $1,200 in tax, but nothing's been withheld. So fast forward to tax time, you do your taxes and you realize that you're gonna have a fair amount due. So how do you get around this? So because there's no withholding tax on the minimum amount, you can still request to have some tax withheld at source. So same example, $4,000 redemption out of your RRIF, which is the minimum amount. You can ask your financial institution to withhold taxes, 10%, 20%, 30%, whatever you want. We do recommend that you have some tax withheld, and it all depends on how much other income that you have. So for most of our clients, we do 10 to 20% tax withheld at source, even on the minimum RRIF withdrawal. And that just allows them or avoids a large tax bill come tax time. So it allows them to kind of prepay tax, gives them, the amount in their pocket that they actually have to spend versus having to put some money aside for taxes down the road. So maybe a bit more efficient way to do it, but be aware that if you only take out the minimum out of your RRIF account every year, it's still taxable income and there's no taxes withheld at source. My biggest concern for our clients when they come in and meet with us and we put a plan together is you have multiple income streams. So as you hit retirement, you usually go from one income stream, which is your paycheck for whoever you work for, to multiple income streams. You have your CPP, your OAS, maybe a pension plan, RRIF payment, rental income, whatever it is. Usually you have at least 3. Some of our clients have up to 7, 8, 9 different income streams in retirement. The problem with that is that, when you were working for your employer, you had one income stream and there was a proper amount of tax withheld off that income stream. When you have multiple income streams, CPP and OAS typically don't withhold any income tax unless you ask them to, okay? Your RRIF account, like we just talked about, if you only withdraw the minimum amount required, there's no withholding tax, okay? Maybe your pension's only $1,000 a month, so there's very little withholding tax. So each income source doesn't withhold back any or very little amount. But come tax time, CRA looks at everything together and you're actually gonna owe a fair amount of taxes. So, when you plan out your retirement income, make sure that you have tax withheld at source, or make sure you put money aside for taxes due at tax time. So very important. So again, we'd like to have a bit of money withheld at source, especially on RRIF, CPP, and OAS payments, just so come tax time, you pre-plan for that. It's hard for a lot of people to put money aside and leave it. So we'd like to have money withheld at source, withholding taxes held at source, just as a cleaner way to do it, prepay some of that tax bill and avoid a large tax bill at tax time. So that summarizes withholding tax, how it works, and how to use it effectively. Again, as a reminder, minimum amounts, there's no withholding tax. Anything above that, there would be on your RRIF withdrawals. So make sure to set up some sort of withdrawal, even on the minimum amount, so that you don't run into a large tax bill at tax time because you have multitude of income streams. So just keep that in mind. So hopefully that's helpful, puts you more in line with a better tax time, and you don't have a huge tax bill when you do and file your taxes. So thanks so much for joining us today in this video around withholding taxes. Hopefully you're getting a better understanding of what to do with your RSP when you retire, how to convert it to a RRIF, pension income tax credits, withholding taxes, all of that. So hopefully you have a better understanding in the first 3 videos of this mini-series. In tomorrow's video, in the 4th video, we're going to talk about, does it make sense to take money out of your RSP before you actually retire, or before maybe your spouse retires? So we're going to cover off some scenarios there. I actually just got off a call with a client of ours, and we're doing exactly that. So she's retired, just has a bit of CPP and OAS income. He's working, has good 6-figure income. But what do we do with her RSP in the meantime? So we actually created a strategy where we're going to draw out her RSP over the next 4 years, and it's going to save them $9,000 in taxes. So, there's some benefits in tax planning around that. So we're going to go over that in tomorrow's video. So thanks again for joining us today in this video. Hope you liked it. If you did, make sure to hit the thumbs up. It really does help get our video out to more people through the YouTube algorithm. It really does work, so please hit that thumbs up. And if you haven't subscribed to the channel, please do so. We'd love to have you as part of our community. Again, we post 2 videos every single week throughout the year, and sometimes we'll add in these mini-series where it's a bunch more videos on a specific topic. So thanks again. We'll see you in the next video.